Welcome back for another episode of Stock Market Chart Analysis for Wednesday, January 26, 2022. This is a daily chart of the S&P 500. Today was a very bearish day. We gapped higher, tried pushing above the 5-day, the 200-day moving average, and found resistance around the 4450 mentioned in the previous video. This area was strong resistance, was able to push above it. However, it reversed lower and it closed around the same close as the previous day. So the path of least resistance still remains to the downside. Support will be the same as the previous day. If it's approaching from above, then should be support. If we gap down, try to push higher, well, obviously that's going to be a resistance. So I'm looking at the same levels. I don't really see an advantage to play long or short. We're below these moving averages, um, well, well below the moving averages, and also we're far away from the bottom from 2 days ago. So playing long or short, I don't really see an advantage. What I would like to see, I would like to see some price consolidation. What I mean by that is, these candles. I mean, the range is like 100 over 100 points. I want that range to shrink down to, I don't know, half of that, build some consolidation, and look for a pattern. Because now, like I said, even if you want to play short or long, it's like, where do you place your stop loss? You need to have like very loose, stop losses. And even if that's the case, I mean, it gets very tricky where if you're short, it gaps higher, pushes way higher, and then takes you out. And if you're long, it gaps down, you end up with a big gap down, pushes lower, and stops you out. So I would like to see some consolidation before I even consider buying or going short. For me, the best setup would be if we consolidate near the lows of that bounce. Consolidate around this area and then play it either long or short. I'm not saying it's going to happen. This is what I wish could happen. Let's now move on to the NASDAQ 100. The NASDAQ 100, a similar intraday pattern, gapped higher, pushed higher, and closed below, big reversal and closed below the 5-day moving average. Found resistance up here. This has been a pivot point for the last few months. Levels that I'll be watching tomorrow will be the same, where you see those green zones should be support. This one is technically more damaged than the S&P 500 because the only moving average, really short-term moving average, was a 5-day moving average, and it couldn't even close above it. All the other moving averages are way up here, too far away from the close. And this one is actually relatively closer to the bottom from 2 days ago than the S&P 500. So this one, don't be surprised. I mean, it's only about, let's see, about 500 points roughly from this bottom. And today's range was more than 600 points. So don't be surprised if even tomorrow we uh, open lower and quickly sell off and end up dipping below that low. But of course, there's some resistance here, but I'm just saying that it's very possible based on the volatility that we've seen the last few days. I would expect volatility to continue for the next few days, meaning the rest of this week and early next week. And I don't think I'm going to trade the rest of the week, really. I don't see volatility shrinking enough for me to get a buy trigger or a buy signal. Definitely not interested in shorting up here. Dow Jones Industrial Average. This one, same as the other indices, couldn't close above the 5-day moving average. Found heavy resistance up here in that zone. Um, it is now or it close between very strong support levels or very important pivot points, which I would say was this low and all these moving averages. Now you're here in the middle, so I don't really see an advantage of playing it long or short. I would have to say, or I should say, see some consolidation, some price consolidation before uh, considering trading this index. Let's take a look at the semiconductor index. For this one, I cannot say that it was bearish. I think it was kind of like neutral because it's still hanging around the 200-day moving average. Tomorrow, it can easily gap higher and push higher and use that as a very strong support. If we dip lower, then this has been acting as very strong support also, but now it's trading around these two moving averages. So that says a lot. That is the strongest of all the indices. And I'll be watching this one very closely and look for clues because if this one is strong, chances are, the NASDAQ will follow. The NASDAQ so far is weak, so is it gonna drag this one down? We'll see. It's kind of like mixed currents for me between the semis and the NASDAQ 100. So we'll see what happens tomorrow. Let's now review the IWM Russell 2000 ETF. This one was relatively stronger than the other indices for the last couple of sessions. But this chart is just ugly. So as I mentioned, I wouldn't really trust the bounce. I think the other indices had a better chance and were easy to manage. This one is really in the middle of nowhere. That big bounce today, it pushed higher also above the 200, above the 5-day moving average, and quickly reversed lower. Now it's trading or closed right at that zone between 196 and 197. Tomorrow it can easily just gap a little bit lower than that. Should act as heavy resistance. But I mean, if we open lower, I don't see why it wouldn't visit again the low from 2 days ago. And I would expect that zone between 190 and 191 to act as support. But this one has been very weak. So I would not be surprised if this one will be the first index that will break the low from 2 days ago. I really thought that this one could really get going after that big sell-off. I thought this bounce could go, much higher. But after today, I don't see that happening. It is very weak, continues to be very weak. Thanks for stopping by and good luck trading tomorrow.